Hello and welcome to another update video about AGIX. So AGIX continues to grind higher. We talk about the next levels to watch in this video. It's obviously one of the AI coins which is currently moving to the upside, as per previous updates. We were still watching for the price to go higher. We had two bullish scenarios on the chart. I have taken one off the charts now. And I've left the more bullish one on the chart. Let's maybe talk about briefly which one, what the previous one was. So in the previous count, I shared them both with you, but the one I've taken off the chart was this one. A scenario in which we said, okay, wave 1, wave 2, wave 3, wave 4, wave 5. It just doesn't look right in terms of proportions anymore, not with that extended move up here. Still valid though, but basically a bit overextended, that fifth wave now, and it would be a diagonal pattern. The problem is, it just doesn't look right anymore, and I cannot rule it out, but it starts to look more and more like an ABC structure. So I feel it doesn't make sense really to leave this one here on the chart if it has become less likely, especially as we haven't seen any sign of exhaustion here. Okay, so both counts, however, are bullish, and let's talk about the one that seems to make more sense now. This is one that we talked about before, but I think now it's a bit clearer on the chart. It's this ABC structure, okay, that we say this was an A wave because the initial move up is clearly a three-wave move. That's quite clear. You see that here. This is an ABC in wave A, 3 waves. This is a B wave, and then we have a C wave up, so ABC. Therefore, it's a larger A wave. Then we have a B wave pullback. It was quite deep. And then, well, not for a B wave, but for the previous count it was. And then now this could be a C wave to the upside. A C wave is a 5-wave move, and I'm labeling this as a wave 1, a wave 2, wave 3, 4, 5. Okay, what's the general target area for a C wave? Well, you see it on the chart actually. A C wave itself here, let me change the wave degree by the way. C wave should reach the 100% extension level. That's at $3.32. That's sort of a very, it's one of the most reliable C wave targets. Sometimes C waves only reach the 78.6 extension. That's at $1.72. It's certainly the next relevant resistance level I would pay attention to. $1.72, $1.73. And if we push above $1.73, then we should see the price get to $3.31 next. This is a chart that doesn't offer great precision, but we can use these structures here to determine these Fibonacci levels. Above $3.31, $6.80. All of them, relevant C wave targets. Now a C wave is a 5-wave pattern. Okay. We've completed the wave 1, we've completed the wave 2, we're likely now in the 3rd wave. So talking about sub-wave structure targets for the 3rd wave, what we typically do is to take the length of the wave 1 and compare it with the length of the wave 3. Now it's already extended. We've now reached the 200% extension level. So it makes sense to layer the next Fibonacci levels here onto the chart, the ones that could matter just for the 3rd wave itself. Just to see as well, is there any Fibonacci confluence anywhere that we could use and that gives us additional relevant levels to watch. And so let's just add the 300% extension as well. It's way overextended, or no, well, it's not an unusual extension, that we see right now. But it is still quite extended, okay? That can be explained by the AI hype. And the 3rd wave has now reached the $1.29 level. So that's the next micro resistance. Then we've got here a cluster at around $1.76 to $1.78, $2.17, and $3 is the next. Yeah. Then if we look at, can we say where this will finish? Not really, okay? I would not want to guess where the 3rd wave finishes. But what we can do is to define support. So we can identify the relevant support area for wave 4. This has to move with the price as we climb higher. So if we say, okay, we've now reached a certain area here, And if we get a pullback, the support is between 56 cents and 87 cents. Let me just double check that. Yeah, it's the length of the third wave. That gives us fourth wave support. And as long as we're holding 56 cents, trend continuation higher can occur. If the third wave extends, which it ideally does, because otherwise we might struggle to get to the 100% extension target there. But to be honest, it's already way overextended. So we need to just wait for a bit of a signal here to say that we've formed some kind of a top. Yeah. And here around 68 cents. I mean, only really when we reach 68 cents, which is the last swing low, we can really say that some kind of a top is in place. And the only really reliable way to say a fourth wave has started or is unfolding is if it drops to the 38.2 fib level. So that tells you a lot about the risk that's currently in the market. Yeah, because basically you have to accept, I don't know, a 30-40% price drop into the support area to basically confirm the fourth wave is unfolding, right? And also, in addition to that, you won't know if this is bearish until the price is broken below 56 cents. So the risk is very high. But that doesn't mean it's bearish, absolutely not. I mean, I just want to highlight that obviously the more extended these coins go and these charts go, the higher the risk. And yeah, we should then still get a fifth wave afterwards. Okay, just bear in mind that these coins or these charts break from time to time. It's always a question of reward and risk. But here we can still look at a potential $3.31 target, possibly even higher. And then if we go to the 4-hour chart, as you can see, the last swing low is here at 68 cents. So yeah, I mean, that's the next structural swing low and support. And that's also where the 38.2 retracement level is. I don't think there is any earlier support level that we can highlight. Yeah. So this is a support zone. If the price comes back into this support area, it is an area where a reversal could occur from a wave 4 into a wave 5. Yeah, this is sort of what I'm tracking on. What happens if we break below 56 cents? Well, it would be tricky. I mean, if we break below 56 cents, then probably I would have to assume, just thinking, yeah, I mean, it would be tricky. If that happens, there are going to be two options, and there's always a problem when we're dealing with corrective structures. We can say, okay, maybe this was a 5-wave move. And then we have this 5-wave move, which is the previous count we had, just with an extended fifth wave. This topped as a larger wave 1, and we're now forming a larger wave 2 pullback, which might end in this region here around 16 cents. Crazy. And then from there, a third wave rally. This would also be bullish, but would involve a much deeper pullback. Just to highlight, some scenarios for risk management. The other one would be, and we would need to look at the structure then, that yeah, we have our A wave, yeah, we have our B wave, but this here is ABC in wave 1 of an ending diagonal. We do a wave 2 pullback, but then this doesn't really add up because then we would get crazy extensions higher. So we'll see. I mean, at the moment, it's a dynamic assessment of what's probable at the moment. And at the moment, I can offer you this support area and the relevant resistance area. So the parameters, you have certainly some key parameters to watch here. For now, I don't see any sign of exhaustion. So this is likely going to push a little higher. And if it doesn't get above 129, then the support area is defined below. That's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.